Welcome to Bar Chart, series of educational webinars designed to offer you trading knowledge and to empower your bar chart experience. Today's session, leveraging pre-market price movements with the trader's cheat sheet. Benjamin Franklin is once noted as saying that if you fail to plan, you're planning to fail. The pre-market movements combined with the right combination of technical analysis like percentage of price change and volume can offer valuable clues to the trader for planning probable price movements. Now, failure to take into account this critical information could lead to trading with your emotions and not your head. Hello, everyone. My name is John Rowland, Bar Chart Senior Market Strategist. And as a former floor trader, I've heard and I've seen it all, like the expression that novices open the market and professionals close it. And I've witnessed how retail traders let their emotions drive the decision-making process, be it FOMO or greed, and they push price right into the levels that I have pre-planned to take advantage of their mistake. Bar Chart's pre-market trading page filters out stocks that have become very active, gainers and losers, and as well as those that have gapped up or down before the beginning of the regular trading session. Now, armed with this information, I'm going to show you how to blend simple technical analysis with our bar traders trading cheat sheet pivots, our floor trader pivots, to find higher probable outcomes and to help you to manage your risk. Now, before we set to doing all that, please welcome my partner and our moderator, Bar Charts Project Director, Jean Baker. Hello, Jean.
Hi there, John. How are you doing?
I'm doing well. Yourself?
I'm good, thank you.
What did we talk about this morning? We didn't get a chance to pre-plan anything, did we? No, we didn't. Did I lose you, Jean?
Oops, sorry, I muted my microphone. I'm here.
Oh, great.
I'm here.
I got a little nervous there for a second.
No, everybody, you can still send your questions in. I'll be moderating for John, so all good here.
I appreciate it. All right, you ready to get started then, Jean?
Absolutely.
All right, just remember that today is for educational purposes only, and that decisions to buy, sell, or hold or trade a security should be based on advice by a qualified financial professional. We're going to talk a little bit about day trading concepts. And again, day trading is a particularly high risk and can cause you to lose substantial sums of money. And under no circumstances should we be liable for any loss or damage that you or anyone else incurs as a result of any trading or investment activity that you or anyone else engages in based on the information or material you receive through barchart.com and our services. Okay. So where to start? Well, if you're not familiar where this page is, you go into stocks and you can see where it says before and after markets, or pre-market and post-market. Now, just for today, we're going to concentrate on pre-markets. Maybe we'll do a post-market analysis later. And I just want to concentrate on the market behaviors of pre-markets. But you can find it here on this section. And then what we'll see here is that we divided a pre-market activity into 5 different data tables that you can choose from: most active, pre-market gainers and losers, and gap ups and gap downs. Now, what consists of a pre-market activity? Well, we're looking at US stocks that trade between 4 a.m. Eastern Time to just at the beginning of the opening bell at 9:30 Eastern Time. Now, notice that the data is slightly delayed and that this page, there are a couple disqualifiers in the screening process. And that would be that we're using common stocks that have a price of greater than $2 and an important analysis, volume above 1,000 shares. Now, this eliminates a lot of small transactions, fat fingerprints, illiquid markets, and those small priced penny stocks. And for today's discussion is going to be basically purely technical in a standpoint. I'm going to give you kind of some behaviors that I've recognized over my experience of my time trading, but we're really just going to be talking about technicals. And I'm going to offer some generalities about pre-market behaviors. Now, these generalities, they could change. Situations change, right? They can't always be defined to one particular set of elements, let's say, in any given stock. And there could be other catalysts that could be driving what is going on in our stocks. And certainly that could be a fundamental aspect. So it's important for you to look at, all the potential inputs that could be trading, making the stock move. And certainly fundamentals would be one of those price catalysts. So before we start, if you see the green E here, this represents a stock who has earnings within 7 days of today. And if you put your scroll over it, you will see that it tells you exactly when that earnings date will be. Now, a lot of them would have been, for instance, this one would have been an earnings date that happened last night. So that was probably the catalyst that got this stock moving. All right. So right at the top, up in here, in a pre-market, if I'm looking at this before 9:30 in the morning, you're going to get a quick snapshot of the overnight activity of the S&P, the Dow, stocks. This is a European index, and the FTSE, which is the English stock market. And this will kind of give you a sense of the broader market's general directions. In other words, kind of what is going on, right? What's the opening call going to be for the stock market? Now, at 9:30, what's going to happen is it's going to say what it just says right here, pre-market close, and you're going to get this little pink rhythm. So you will not be able to see the futures at that time. But it is a nice way to kind of look to see what is happening and seeing if maybe there's some spillover from what had happened in the US market versus the European markets, and if one or the other is maybe influenced. And now, for instance, this morning, the S&P and Dow were down like maybe 0.5%, where I think the FTSE and the stocks were down like 1 to 1.5%. So could there have been a follow through, maybe from yesterday, or is the European market influencing what is going to happen in the US market? All right, so let's start with our most active page, our data column here. And I'm going to give you 2 simple rules as we go through this process. So first, let's start by looking for large pre-market volumes comparatively to our average daily volume. Let me say that again. I'm going to look at how much volume has traded, and I'm going to look at that as it compares to how much volume on an average basis over, let's say, the last 5 days or the last 20 days. And I'm going to give you, again, a generality, a minimum of 10%. I want to see the pre-market volume of at least 10%. Now, again, as this percentage rises, it adds more confirmation to the price action that we're seeing. Now, these candidates that have a 10% volume compared to an average in the pre-market, they have a greater probability of price continuing in the coming regular session. In other words, volume is confirming price. Now, those that don't reach that volume threshold, that 10% threshold, have a greater probability that price will retrace to the previous day's close, previous day's last, or when we start looking at pivots, it might retrace to the first nearby pivot. Now that could be the actual middle pivot, or it could be one of the supports or resistance levels. So right off the top here, we can see that, I guess this is Xiping, it's a Chinese stock, right? It had a volume of 5.4 million shares. Now let me just do this. I'm going to go to the full list, and this is going to make it a lot easier for us. And you can see that it traded 5.4 million shares in the pre-market session. At its average 5-day average is 17 million. So it traded about roughly 30% of the average volume. So that would be a good candidate that says that price will probably continue in the direction of what we're seeing in this activity. In other words, this case, price is probably going to continue to go up because volume is confirming that price action. But if I go down here to AT&T, right, it traded 2.1 million shares. That's a lot of shares, right? But if we look at it in terms of our average, here we can see again our 5-day average, it's 75 million. So this is a very small percentage of what we normally see. So this would be a candidate that whatever price movement we're seeing here in the pre-market, there's a higher probability that because we don't have the volume that confirms that price action, that price is going to return to where it came from. In other words, it's going to return to the previous day's close, or when we start to look at pivots, it's going to return to some of those lower pivots from where price has gone away from. So that's how we're going to kind of look at this market activity page in the terms of volume and this 10%, this very general type 10% rule. Now, under our main view here, what we can do is we can go to something called mini charts. And the aspects that I want you to think about when using mini charts is there's a couple things here. First of all, this is a good way to look to see if price has already returned again to the previous day's close, which would be represented by this blue line here. And what I like to do is I'm going to go to the 5 days. I'm going to look at this in terms of a trend analysis, a very simple trend analysis. I want to see what this stock has been doing over the last 5 days. And is that price action that I'm seeing based on this activity, is it with my trend or is it against my trend? Again, if it's with my trend and it's confirmed by high volume, then there's a higher probability that price is going to continue to run in that direction. But if it's contra to my trend, or it has low to moderate volume, then this again would be a candidate that would be greater for price to return to our closing price or a previous days. So let's click on this chart here. And what this is going to do is this is going to take me to a chart of the extended hours of this particular stock. And what I'm going to do now is I've gotten a sense of this stock as, it's kind of looks like it's trending a little bit higher. And then now what I'm going to do is I'm going to concentrate on what is this stock doing in a very particular time frame in the pre-market. And that would be between, let's say, 8 a.m. Eastern time and just before the market opens. Again, volume was going to help confirm that price action. And again, there's a greater probability what happens in that little time frame, that 1.5 hour time frame, that the whatever's going on there is probably what you're going to see as we move closer to the opening of the regular trading session. And so you can see here, here's our 8 o'clock candle. And then what do we see? Well, we see that price was moving higher. And then as we got into the opening of our market during the regular trading hours, we got that continuation of price.
Hey, John. Okay,
Yes.
before you leave that chart, I want to point out, in order to view extended hours on an intraday chart, you need to have your extended hours checkbox checked right under, yeah, right there. And if that's not checked, you're not going to be able to see the extended hours, and it's only available for intraday data.
For
Okay?
intraday data, yes.
Right.
Okay. I knew I forgot something there, Jane. Thanks. All right, so we done this analysis, and now we're looking at what is going to happen between 8 and 9:30. Again, we want to find those probabilities that are going to increase with the price action that we see that is also with our trend. Now, another thing that we can do, let's go back to our pre-market page. If I go under the technical aspect view, there's two data points here that we can use. One is our bar chart opinion. Now, if you're not familiar with the bar chart opinion, we do get a lot of questions about this. Is this an analyst's opinion, or what does this represent? Well, this is really a technical opinion based on 13 common technical analysis. And yes, last week we actually did a webinar. You go into archive webinars. I did a whole webinar on how to use the bar chart opinion and the strength and direction and how to look for, a candidate. So if you're not familiar with it, that's where you can use it. But what we want to do is we want to look for those candidates that are seeing that price action that is with our opinion. In other words, in this particular stock, a greater the probability, because the bar chart opinion is 100% buy, meaning that all 13 indicators are indicating a buy signal, that we're going to see a continuation of that price action. The other data point that we can use here is our 20-day volume average. And notice that our 20-day volume average normally will be a little bit different from your 5-day average, but you can still use that 10% rule for that as well. All right, the second simple rule that I'm going to do in the most active page, and I'm going to apply this also to my market gainers or my market losers, is I'm going to look at the pre-percentage change. Again, as a guideline here, if my percentage change is less than, I'll say that again, less than plus or minus 1.5%, especially in those low to moderate volume stocks, these are candidates that have a higher probability that price is going to reverse to our previous last or one of our pivots. If my percent change is greater than 2%, especially in those that have moderate to high volume, then there's a greater probability of price continuing. Again, we want to kind of concentrate on those opportunities that we're going to enter a trade that is with our trend. In other words, our 5-day trend or our daily trend or our higher time frame trend. We want to find those that are in concert with them. All right. So let's do this. Let's look at the first example. So here's AT&T, right? And what did we see? Well, AT&T had a percent change of pre-market percent change about just a little bit less than 1%. And we said that the volume, the pre-market volume was 2.1 million. All right, so less than 1.5% and a light to moderate volume. Is it 10% of our average volume? No, it is not. So this is a higher probable candidate that price in the pre-market will now, as we come to the regular hours, will revert back to the previous close. So this is where we're going to start adding some other elements to our decision-making process. So first of all, if you're not familiar with this, under the plus sign here, you can open this up and this will take you to a quick chart and you can kind of see what this price action is doing. Now, without even doing a bar trend opinion analysis, you can see that this stock has been in the downtrend. So what are we seeing here? We're seeing prices moving up in a downtrending market. This is a really great candidate that this might be a good selling opportunity. In other words, we believe that because we didn't get volume and that price movement was small, that price is going to continue to go back down at some point today. And also, this is where you can also find our bar chart opinion. Again, the chart I just looked at was very easy for me to see that, but here you can see that under the bar chart opinion, the short-term, medium-term, and long-term indicators are all indicating sell signals. In other words, our dominant trends are still moving lower. Our price action was higher, so it's opposite. So this would have been a good trading candidate. The other thing over here in the three links over here, I can also activate a chart. Now I could do that through the plus sign as well. I can go to a larger chart, but let's just go to the chart here. And again, what I've done, as Gene pointed out, I'm in real time and I'm also looking at the extended hours. And so let's look at what happened with AT&T. So here is down here, 7 a.m. is that first green candle. And this is where price gapped up. Now, why did it gap up? Well, I think AT&T had some earnings last night. I think that's what it was. Yeah, it had earnings this morning. And maybe the earnings were a little bit positive and everybody rushed to buy it. Emotional, right? About emotional. And then what happened from 8 to, let's say, 9:30 until the opening of the exchange? Well, price, right? No volume to confirm and not a large price movement. So this is a greater probability that this is going to revert back to our last, and that was 1480. And that's exactly what it did. Now, what I can do now also is I'm going to add another layer to this, and that is going to come from our trader's cheat sheet. And that is what we call our pivots, or our pivot resistance 1, 2, and 3, and pivot support 1, 2, and 3. And what I'm going to do is, there's a kind of a cool little study we have here. So I'm going to come in and I'm going to add a study, pivot points. And again, I'm looking at day. I just want to know what the pivot points are for today. And I'm going to add them in. Now notice what happened, that this price movement we had last night opened up right at our first resistance. So, okay, so if you're not familiar how pivots work, this was our middle pivot, and then here is our first resistance, second resistance, third resistance, first support, second support, and third support. So we opened up right on resistance. Again, a great opportunity to short this stock in the pre-market. Or if you were, say, you were an options trader, you were looking for an opportunity to, maybe sell some calls, or looking for an opportunity for price to move lower, this would be a great candidate, and that price would return to the mean. Excuse me, we return to the previous close. Now, the previous close on this one I have is 1480, and it also happens to be the pivot as well. So that's not common, but in this case, they're both the same value. So here's how we're using the trader's cheat sheet to look for those pivots, support, or resistance to help us to find an area where we believe price is going to change direction. And here was a candidate that was a weak candidate. Now let's go back to our gainers, our volume gainers. And so I'm going to go down here to volume gainers. I'll open this whole list. And, well, exactly, let me go back to that. I just forgot something here. I want to go back to, let's go back to that AT&T example. So this, there's another little technique here I want to kind of show you. And when we look at price, and now I'm looking in the extended hours, but if I was looking, let's say, regular trading hours, is, you don't really see any kind of gaps here in terms of, let's go to a daily chart, right? It's just a red candle, right? It opened up higher and went down, right? We don't see any gaps. But if I go to the extended hours and I go to this lower time frame, notice that there is a gap here. Now this gap is inside of the previous day's range. This is the previous day's range. It's called an inside gap, or sometimes referred to as a professional's gap. These are also great trading opportunities. In other words, that the price is going to revert back to the closing price from the previous day, or the price is going to return. So these inside gaps are not noticeable in, let's say, higher time frame charts. You only see them in lower time frames or intraday time frame charts, and also the gap is inside of the previous day's range. These are really great candidate setups. So let's go back to our gainers, and we'll go down to here to gainers. And so we said that we wanted to kind of look for those gainers, or those big price movements that are confirmed by price. So let's do that. Let's sort by volume. And you can see, these are all high volume markets, but let's do an analysis. And I did this beforehand. So here is Union Pacific, and it had a 10% price movement today on 800,000 volume in the pre-market session, right? So is that a lot? I don't know. Well, I could go to my technical analysis, and I can see that for Union Pacific, it trades about 2.6 million. So 800,000 would satisfy that 10% threshold rule. So it did have good volume that is confirming that price action. And our bar chart opinion is a buy. So that would be with our trend. So price gaps up and it's with our trend. And so let's do this. Here is my real-time chart. And let me just move it back to a daily, right? A daily time frame. And here's that big explosive candle that happened today. This is the price action that we're seeing for today. So let's go to a lower time frame. There it is, played out in a lower time frame. And then what I'm going to do is I'm going to add those extended hours. So again, how can we use this in our trading? Let's go down to 30 minutes. So this now is a gap that is outside of previous day's range. You can see that it's outside this. And if I use my trader's pivots, way outside it, right? So this is what we call a gap and go. And this is a high momentum trade. So how do we use this, or how can we use this as a day trader or as a swing trader? Well, what we're going to do is we're going to wait for this first impulse. And then as time goes on, remember, what is our price action going to be doing between 8 and the opening? I'm going to wait until price gets above that first impulse candle. Now you could do it as price goes trades above it, or you could wait for price to close above it. And then we're going to see that continuation, that higher probability of continuation of price, because first we have volume and we have our trend. And that's exactly what we saw here. But here's the next level of technical analysis that I can start to use to help me decide if I'm going to jump in and take this trade. I'm going to look at something under technical analysis, which is called our average true range. And again, if you're not familiar with average true range, there are some archived webinars based on average true range. And it's basically a measuring stick of probability in terms of where price could travel in one daily session. Now, I know there's some of you will tell us when I do this analysis that average true range looks at the greatest from the close to the high or the close to the lows. But what we're just using it is for a measurement of how much price can move in during the regular trading hours. And so this is, you can see my 9-day average true range, which is taking in a little bit of today, is around $5.50. But you know, if I take a little bit longer time, I get to about $4.85. So I'm going to come back to my chart. Now I'm waiting for that confirmation that price is going to move higher, right? Well, how much has price already moved, right? How much has already moved from this impulse? Well, it looks like it's already moved, you know, 1 ATR. So now I'm buying at the high end of the range. But again, I'm more concerned about what it's going to do in the coming session in real time. And you can see that the low was around 234 and the high is around 240, right around just outside the range of our average true range. So if I got that buy signal, that gap and go buy signal, do I want to be buying after price has already rallied $5 in the regular trading hours? No, I don't, right? Because now I'm buying at the high end of that range. So maybe what I might do is, this is a gap and go opportunity, but maybe what I'm going to do is I'm going to wait a little bit patiently and look for an opportunity to buy at a lower price that is inside of my average range. And my kind of threshold is I want to be below half of that range. And did market give us that opportunity? Yeah, it did. So here's how you can use that. Now, another technical analysis we can do on top of this is, again, if I go back to my trader's cheat sheet, is I'm going to look at RSI. And again, notice that if we get above 225, based on RSI, we are in the overbought territory. So this stock has already moved a large amount. So even though the gap and go is confirmed by price and volume, again, the technical analysis, the ATR and the RSI are saying to us that we're at the higher end of the range of price today, the higher end of price over the last 14 days. And maybe this night, not a great gap and go trade. And maybe we might want to wait a few days for greater confirmation, or maybe we might even get a bit of a price reversal. All right, so let's go back to our pre-market. All right, so let's look at gainers. Again, we looked at gainers. Let's look at gap ups and gap downs. Now, I talked about this inside gap, this difference between the closing price and what happens in the extended hours, the pre-market session. But this one is screening here is going to give us all those candidates that gapped up. And a gap up for us would be that the opening price is above the high of the previous day. And a gap down would be the opening price is below the low of the previous day. So these are all going to be those gap and go candidates. So again, what did we say? Well, we want to find a gap of a greater percentage. We want to find gaps that are confirmed by volume. So let's do that. Let's come in here under our full list. And I'm going to do a screen. And what I'm going to do is I'm going to screen on high volume, right? I already know that these are gapping up. And again, I know what my threshold is 2%. But what I want to do now is I want to find candidates on a technical basis on what is happening in my charts. In other words, I want to see those that are gapping up and taking out a previous high. So you could say maybe a 1 month high or 6 month high or a 52-week high. Again, a lot of different technical analysis that you could do based on whatever value you believe. So I'm going to come in here where it says new highs, and I want to know the new high date. And I want to find the new high date for 1 month, and I want to choose today's session. So what I'm doing now is I'm looking for high volume candidates that have gapped up and are now making a new monthly high. And if I do that result, I only get 14 stocks. So these would be great gap and go candidates. Again, now I can go down and break these down, look at the chart, see how much it gapped, look at the volume, look at it in relevance to recent price action or recent price performance. And, notice, look at a couple of the stocks that we already did a demonstration on, they came into this list. Now, the one that interests me was Google. All right. So let's look at Google. All right. What is our pre-market volume? Well, our pre-market volume is 1.6 million shares. That certainly seems like a lot, right? What's our gap up? Well, it's about 5.5%, right? So what I can do is let's check our technicals on this, and we can see that 1.5 million or 1.6 million based on a 20-day moving average of volume is not 10%. So here's a stock that gapped up, gave us that percentage, but didn't have the volume. Now, is that gap up with our trend? Yes, it is. So here's where we kind of got to blend the two simple rules together. Google is telling us that it wants to go higher, but we're not getting the volume to confirm it. So let's look at Google. Again, what's our opinion? Right? Short term, maybe a little weak, but longer term and medium term, certainly in an uptrend. Again, our technical analysis, how much as we see as a volume, 32 million. And what is our average true range? $3.31. So what I did was set up for this. I took the liberty of adding the study of the pivots, and here is our pivots. And again, I'm in a daily chart, and what do we see? Well, we see price has opened up above the previous day's range, right? A gap and go. And not only that, but this gap up is above this green line, which represents the highest price that we have seen over the last month. And I don't think this is a all-time high, but certainly over the last month. So this would be a great candidate for a swing trader that would say that, hey, price is going to continue to move in this direction. But what's the caveat? The caveat was volume, and volume didn't confirm this gap up. So what did we say about when volume does not confirm? Well, there's a higher probability that price will return to the most recent pivot or the most recent close. So notice here we can see that our pivot is above our close from the previous day, and that price is around 125.24. So here's a strong candidate for price to continue to move in this direction, but because volume did not confirm it, there's a higher probability that over the next few days that maybe Google will come back and fill this little gap and probably find support right around this pivot. Now notice that this pivot level 125 today versus where it is about 1 ATR away. Now it's not guaranteed that it's going to happen today, but certainly it falls into our range. Now let's look at this at a lower time frame. And this is where we can kind of use that pivot idea. Is our red line here represents our first area of resistance. And you can see it kind of just went through it. But old resistance can become new support. And we are just languishing right now on that support line. And an old high can become a support level too. So we're kind of languishing there too. But again, without volume to confirm this is giving us a higher probability that maybe Google will back off over the next few days. If I was thinking about this as a buying opportunity or playing this momentum because of this gap up, well, now what do I need to see? Well, I want to see volume come in over the next day or two and probably want to take out this high. So again, we've got to have a little bit more patience. What would the novice would have done in this trade? Well, the novice would have just jumped right in and bought this Google. And what might happen to them is over the next few days, they have what they thought was a great winning trade is now down $6 or $7 or even $8. Okay. Let me do this, Gene. Let me pause for a moment. I see you sent a couple of questions through. Is there any general questions that you want me to answer?
Nothing general. I just want to point out for everybody who's listening in today that some of the screening opportunities that John showed you on the pre-market pages, those are for our Bar Chart Plus and Bar Chart Premier members. If you are not a member, I encourage you to sign up for a free 30-day trial. You'll be able to screen on the pre-market data and actually the post-market data as well, and apply all these different studies like the pivots on your charts as well.
So I got one question that was about an ADR, and that example, I guess it was that Chinese stock, but also I think there was an example I wanted to do today. There was a British tobacco company, which was an ADR. Could there be a difference because of the pre-market activity, let's say here in the US, is related to the regular trading hours of, let's say, European stocks? And so could there be more of an influence of what is going on, or there might be more statistics in terms of volume and price action data points that were related to, let's say, the European hours. So yeah, Wayne, yeah, that would be something that you could do. Again, I only have what I have in front of me today. I was trying to find some really good examples. I wish I didn't have to use the ADR one. It was just the one that was at the top of the list. So again, yes, do European stocks that are traded as ADRs, are they more influenced by their regular trading hours in Europe? Yes. And is that part of our pre-market session? Yes. But also you do get that follow through during the US session. Okay, Dan asks, did I say that a percent change of less than 1.5%? So yes, a plus or minus 1.5%. Let's say you're looking at a stock that had a move of 1.5% to the downside. These might be really great buy the dip candidates, especially if your stock has a very strong uptrend in the short term, intermediate, and long term. So a stock that falls by less than 1.5% on low volume is, and that it has a strong uptrend, would be a great buying candidate. So I kind of trying to look for one of those today, and I went through the scan of that process. Small price movement, on those gainers, right? And the one that I came up with that looked like the best candidate was this PHM. This is a home builder, I believe. And, again, this was actually, I think this was less than 1.5% on a gap trade up, not a trade down. And, again, what did I say to you? Those that have low volume or within 1.5% have a greater probability of returning back to the last, and that's exactly what we did. Now it is holding above the pivot, and that could be a confirmation of our higher time frame trends. And again, if I did my bar chart opinion, this is giving us 100%. This is a stock that is continuing to trade higher. And again, the earnings today came out, I guess this was last night. We got a little bit of a bump, but again, what could I look for in an opportunity? Well, let's look for that slight price movement today from last night, right? Look for that retracement back to the previous day's of close, and that might have been an opportunity for us to get back into this stock if we believe that it's trending higher. All right, so I think that's a decent example. I wish I looked at them. I didn't see any really great examples of those that gapped lower or traded lower. Excuse me. John asked, why don't you use relative volume comparative? Yeah, John, you can use that one. I try to make a lot of my webinars as simple as possible, but you can definitely use that one. There's a question about how does pivot points differ from VWAP? Remember, VWAP is a volume weighted average price. A pivot is based on the previous day's price action. So there's two different analysis. Again, I think the question came from Jeff. Jeff, we have a VWAP webinar, and we also have a trader's cheat sheet webinar, so you can look at those as well. So Zach, as price sometimes is right in the middle of resistance and price points. How will you decide whether to buy or wait? Well, I think you answer that question, right? If you're in between range, right? You're in between a range of your ATR, you're in between a range of pivots, you're in between range of support or resistance, then yeah, you have to wait, right? You have to wait until you get to one of those levels to make a decision. Right. So the question Dan asks is, do you consider the size of the gap relative in terms of retracement? So again, if that gap is, let's say, less than 2%, then I think then you can rely on the probability of a price retracement. If it's outside of 2%, then you're probably going to see a continuation. Now, if you want to add another layer to this, Dan, is look at the size of the gap in a relationship to your ATR as well. And if you get a multiple ATR gap expansion, that is another great confirmation that you're going to continue seeing that price action. But if your gap is, let's say, at the edge of the ATR or inside the ATR, then again, probably a higher probability that you're going to return to the previous day's pivot or the previous day's close. Okay. Ravi asked about Fibonacci's. Yeah, I use Fibonacci's more for dailies. And again, what we're doing here is we're showing more of a day trading setup, but there could be a time where you could get a large price movement that we run into one of these daily Fibonacci levels, and which could act as support or resistance. So for sure on that. Okay. All right. So we're at 150. I didn't get to everybody's questions. I see a lot more questions here, so I apologize. Please do me a favor. Send your questions to support@barchart.com. We'll get to those. If our staff can't answer your questions, they'll pass them along to me. So I promise we'll get your questions answered. Okay. So let's kind of just sum up what we talked about. Remember, let's look for price action that is confirmed by volume. And again, that 10% rule. Let's look at price action that is confirmed by a percentage of price movement. Less than 1.5%, probably a greater candidate for what we're going to call a fade trade. Greater than 2%, greater probability of a candidate of a gap and go. In other words, price is going to continue in that direction. Using our traders pivots in our traders cheat sheet, where we could find, for instance, we might gap up to the second or third resistance, and then price might drift back down. But we want an opportunity to buy into this gap and go. Well, let's wait for price to fall back to the second resistance or the first resistance. Remember, old resistance can become new support, or old support can become new resistance. And that would give us an opportunity to buy a dip inside of a gap and go breakout. I kind of showed you that example. I think that one was with the United, what was it? Yeah, with UNP. Okay. All right, so I hope you guys enjoyed this. Again, really this page here is really just a way to us to get a general sense of what's going on in the market and look for those stocks that maybe interest us or are part of a watch list. And I try to give you some insights of how you can use this as a day trader, but also, as a swing trader looking to be a little more patient and waiting for those greater probabilities that are with our trends. All right. Next week, we do not have a webinar. We're off. We'll be back in 2 weeks. And I just want to remind you, those of you that are premier members, that on Fridays, we have our Market on Close show. And here, this is where you can ask a lot more in-depth questions. We kind of look at some macro information. We look at some trading opportunities, and we go through some technical analysis as well. So if you haven't had a chance to check that out, come and check that out for my premier members. All right, Gene, anything else? Did I forget anything?
No, John, I think that's it.
Okay, Gene, I'm sorry to do that to you sometimes. I know you're not ready for it, but I apologize. All right,
No
folks.
worries.
Folks, I hope you enjoyed today's session. Thanks again for joining us. Be safe out there. The best of health and the good of all trading.